All right, hello, this is Mike with the NetPicks Options Academy. This is the weekend recap for Saturday, November 7. So I apologize for no midweek recap here this past week. We actually just wrapped up our two-day Options Academy class on Thursday and Friday, so a really busy week for us. But I did want to jump in and show you some of the results that we had this week. We'll take a look at the market overview charts here initially, take a look at the big picture, and then we'll dive into the individual charts to take a look at some of the trades that were closed out and some things that I'm looking at for next week. So looking at these overview charts, this is just a simple daily chart of the SPY. You can see I've got a number of different moving averages, both simple moving averages and exponential moving averages. And clearly you can see over the past month, I mean, it's been a pretty straight shot to the upside. Really haven't had much of a pullback at all. I mean, looking at yesterday's session, we did get a little selling pressure here. We did test that 8-period exponential moving average. We broke through it initially early on yesterday during the session. But like always, it seems these days, into the close, we got to rally back up, and we ended up closing back up above it. So for the moment, that level is holding. I want to see some selling pressure into next week. As much as everybody loves the never-ending move to the upside, we need some two-way price action to come back into this market. Okay, the problem with a never-ending move to the upside, the volume numbers are going to continue to drop. Okay, if you've been trading at all here the last couple of weeks live in the markets, you know that it's been a little tricky to get good fills. Okay, when the volumes drop, the liquidity drops. It's difficult to get filled at the mid price like we typically want to see. So I would love to get us to pull back into both the 200-period simple moving average, which is that dotted red line, along with the 20-period simple and exponential moving averages, which are the green lines right there. So I'm looking right around that 206.50 to 206 level. That would be great. Okay, we're not talking about the market tanking out. We're just talking about a healthy pullback. It would cause the volumes to pop up. It would cause the volatility to pop up. It would just give us more things to do instead of just chasing this move higher. I mean, we've got a lot of names that are at all-time highs, new highs. It's tricky to chase these names higher without any type of a pause. So would love to see that pause next week. Keep in mind we do have the highs from earlier in the year on SPY up at 213.78. So the potential is there. If we continue to move higher, you know, we could definitely test that level here very quickly. It's not going to take much to get a move up to those levels. So on the upside, 213.78. On the downside, I would love to see us test 206 next week. That would be great to see. On QQQ, okay, very similar story across all the major U.S. index products. They're all very similar patterns. I mean, you can see here on the NASDAQ ETF, we did test that 8-period EMA as well. We did close up above it Friday afternoon. Unfortunately, we were in our training room on Friday, and I mentioned I would love to see it close right near the lows of the day. Unfortunately, that just didn't materialize. We should know better, right? I mean, buy the dip has worked now for the last 2 years, so the bulls are not going to give up easily here. So on the upside, I mean, we did make new highs last week at 115.47 on QQQ. So, you know, that's the high that we're tracking. Can we continue to plow higher? Sure. Next week, I would love to see a test at least back into the 111 area, right around those 20-period moving averages. That would be great to see. So those are some things that I'm tracking there on the NASDAQ. On the Dow, very similar story. I mean, we're holding that 8-period EMA until that breaks. The bulls are going to remain in control. The high from earlier in the year, 183.35. You can see that back in May. That's a stone's throw away. I mean, it's not going to take much to get us up to those levels. I would first like to see a pullback at a minimum down into the 175 area. That would be great to see. So those are some things that I'll be watching next week. Again, you know, just looking at the overall market, if we take a look at the VIX, let me pop this open. You can see the VIX right back down in the 14 handle. When you get down into the low teens like this, it's just showing that there's very little fear in the market. No one's scared of the downside. Everybody is just assuming that every dip is going to be bought. In the long term, that's a very dangerous place to be in, because long term we know that there has to be two-way price action. Okay, because at some point we're going to run out of buyers on the upside here. And I think we're getting very, very close to that level. Not to mention for us as options traders, we want to see the volatility because that helps us open up the playbook a little bit. Right now, we're very limited in the strategies that we can use. I mean, we're limited to long calls, long puts, long vertical spreads. There's not much opportunity to sell premium in here with any type of odds in your favor. Okay, the options are just too cheap. You can't collect enough premium to really make it worth your while. So hoping that starts to expand next week. I mean, if we could get a move up into the high teens over the next few weeks, that would be great to see. That would set us up for a really nice stretch heading into the end of the year. All right, so let's take a look at some of the individual charts, see what took place here last week. We are wrapping up. Actually, we did wrap up last week the use of our October charts. We've now adjusted and moved forward to November, but let me show you some of the trades that were closed out before we did so. Last week was a pretty quiet week overall for us on the index products. I mean, we had this long trade that we carried in to this past week. This one triggered in the previous week. We kind of drifted higher. We did get wiggled out here midweek this past week. We got taken out with a partial profit. So again, I'm not going to complain. Whenever you can book a profit, that's a good thing. But we did not hit our full target, which was up at 212.25 or so. But we were taken out above our first target right here at this trailing stop dot that I'm circling, that blue dot. So we are now flat. And now we're going to move forward, and the next time we take a trade will be off of the November charts. Why do we make those adjustments? Because we fully understand that the markets are going to change. I mean, if you just compare the market now to what we saw even back in September, the market's completely different, right? So what we do on a monthly basis is we adjust our charts. We adjust the range setting. This is not a time-based chart. It's actually a range chart. We adjust that range setting every month to make sure we're really fine-tuned and dialed into the current conditions. So as those ranges change, okay, our charts are going to change as well. So the next time we look at a trade, we'll be off of the November chart, and I'll show you that here coming up next week. So nice stretch there on SPY. The index products have just been very, very kind to us. Just a ton of profit. I mean, if I zoom in, let me zoom out of this QQQ chart. You can see, I mean, it's just been winner after winner. I mean, there's just a ton of profit here on this chart. Pretty quiet week. We didn't have a single thing to do last week on QQQ. The reason for that, we have filters built into our system where we're only willing to take 2 or 3 trades in a row in the same direction before we hit our cutoff point. So we did not chase this move higher last week because we had already taken 3 trades in a row on the upside. Full winner, partial winner, full winner. We had 3 winners in a row. So what we know from our testing is that long term, after you hit 2 or 3 winners, the odds of success really start to go down. So we're not going to chase this higher. We're going to stay flat. When are we going to stay flat? Until what do we need to see next? I need to see my sentiment indicator down here at the bottom. I need it to cross back below the 0 line. Okay, so it's going to take some selling pressure. I mean, we're going to be flat next week until we get a couple of days of selling. Always easier to stay flat when you're coming off of 3 winning trades. We're sitting on a lot of profit right now, so we're going to stay patient. Let's take a look at GLD. This is the gold ETF. Pretty interesting trade here. Let me zoom out a little bit easier to see when I zoom out. So we closed out of this trade first thing this week. So we hit this short target, and immediately I start getting emails from people saying, Mike, what if I still like gold to the downside? Can I hold on to part of my position looking for the home run winner? The option is always there for you to do that. I personally do not do that. When I hit second targets, okay, I like to jump out. I was in a long put here. Okay, so whenever you're long an option, when you buy an option, you know that time decay is working against you from the moment you put the trade on. So I don't want to give back a ton of profit in case GLD gets choppy and just heads sideways. Now, hindsight's always 20/20. If I held on, could I hit a huge home run winner here? Yes. But in the heat of the battle, let me scroll over here. When I saw this move down to full target, did I know it was going to continue to head lower? No. Okay, so as soon as that target's hit, I want to ring the register. I want to book that profit, and that's exactly what we did. So now we're sitting on hands. There's nothing for us to do. So we just looked at QQQ, which was really extremely overbought. We want to see a pullback. Well, GLD's complete polar opposite. We're very oversold here. I want to see GLD bounce higher next week. Okay, and I'll be watching for that. GLD could potentially be a candidate here very soon for me personally to consider selling some put spreads on. That is one of the trades that I'll be looking at for next week. And again, that is all based off of us being at an oversold level. There's some fear kicking in here with GLD on the downside. Let's see if we can sell some put spreads and benefit from a bounce to the upside. Okay, so nice trade there on GLD. Some of the financials, we talk about the financials all the time because they tend to lead the market in both directions. And, Friday was a pretty good tell. We had the big employment number out Friday before the market opened. Okay, it was the big news everybody was waiting for because the Fed, really keeps a close eye on that specific number. So because the financial names, Citigroup and Goldman Sachs, because they're so sensitive to interest rates and what the Fed does, we came in Friday morning and pretty much across the board on all financials, we saw big gaps to the upside. Citigroup, Goldman Sachs, JP Morgan, pretty much all of them were up 3%. So even though the overall market was down, we came in first thing Friday morning and the S&Ps were down 10 points. Okay, but when we looked at it, we said, you know what? We're probably going to get somewhat of a bounce here at some point because all of the financials are up 3%. It's very difficult for the overall market to move to the downside significantly if the financials are not participating. The financials were strong. The financials basically held the market up. Between the financials and the strength in the Russell 2000, if we didn't have the strength in those names on Friday, it probably would have been a bloodbath. So we have to keep a close eye on these names. And oftentimes I get questions, Mike, with the market down so much, if the market's down 10 points, should we be in any long setups? This is why it's so important to trust the system. Okay, even though the market was down big first thing Friday morning, we were closing out of a full profit on Citigroup. We were in this long trade that triggered in early in the week on Monday. Come Friday, we had just chopped sideways all week. We came in Friday and boom, full target hit. Okay, so it's so important to have that system in place with that roadmap that you can follow. Okay, so full target was hit. On the upside on a lot of these long trades, can you take these with just long calls? Sure. I've been trading a lot of long call spreads, just trying to reduce my risk. I don't want to get super aggressive here on the upside because, like we've mentioned a few times now, we are overextended on the upside. And what I don't want to do is get caught being 100% long with super aggressive positions and then see the market turn on a dime and give back all that great profit from the last few weeks. So I've been trading a little cautious. The nice part about the way the options work, they're super flexible. Okay, could you have made money with a long call? Absolutely. Could you have made money with a call spread? Sure. We gave up a little profit potential to be conservative, but I was completely fine with that trade-off. Okay, so nice trade there to end the week on Citigroup. Goldman Sachs is the other financial that I like to trade. Okay, and this one actually, you can see this long trade. This was closed out late last week. And full target was hit, much like Citigroup. As soon as that full target's hit, I'm out. Okay, there's no second guessing. There's no holding on for the bigger winner. This was just a great trade. So again, long calls, long call spread. Regardless of how you took it, it was just a really nice trade. And it's been a very nice stretch for us on Goldman Sachs. You can see here after earnings, we've talked about this in earlier videos. We filtered out a couple of trades due to earnings. We don't like to trade any earnings releases. I don't care what the symbol is. And since earnings, we've had a couple of full nice winners on the upside. So it's been very, very profitable for us on Goldman Sachs. Some of the high flyers, some of the tech names also had good weeks. We'll take a look at Google here. Zoom out a little bit. So after earnings, we've had a couple of nice long trades after earnings. The only issue here is, we had to take these trades in the direction of the earnings gap. We're extended here. We haven't seen any type of selling pressure at all since the earnings number has come out. You can see the earnings gap way over here on the left. So the first long trade was a partial winner. We then had this other long trade that triggered in early in the week, this past week. Triggered in, made a steady grind to the upside along with the rest of the market all week. And we did wrap the week up with a full target that was hit on Thursday. So it was just a nice trade. A lot of profits there on Google. Again, I know it's an expensive stock. I trade a lot of vertical spreads here on Google. I did look at a number of these trades with call spreads, just trying to be a little more conservative, but really nice trade there. And now we're definitely overdue for a pullback. I mean, no doubt about it. You start to take a look at names like Google, and Amazon's even more impressive. Let me take a look at Amazon here. I mean, look at this chart. Probably one of the more impressive charts that I've seen in quite some time. I mean, you go back here, we have not had a single pullback really since the 500 level. I mean, it's been 160 points straight to the upside without any type of a pause. I mean, just really, really impressive stuff. So do I think we're overdone? Absolutely. Do I want to play the downside? Yes. Am I going to jump in and play the downside right away? Not until the system confirms, not until we get a short trade. I'm not going to front run the setup because we all know that the markets can go in one direction a lot longer than we anticipate. So you can see this latest long trade. It did work out. I personally did not catch it. It was after earnings. It was in the direction of the earnings gap. I don't like to trade around earnings. My students hear me talk about this all the time. Okay, I think it's very difficult to trade around those earnings. So a couple days before, a couple days after, that's that window that I'd like to avoid if at all possible. And by doing it this time around, I missed out on a winner. That's just the way it goes sometimes. So we're very overbought. I'd like to see Amazon pull back, but we'll see what happens here next week. Netflix. Let's go ahead and take a look there. Netflix had this trade on the long side last week. Let me zoom out a little bit. So we got up very, very close to the full target. I mean, we were within pennies of that full target. And the way that we teach our students how we handle these situations, when you start to get 95% of the way to the full target, you've got to lock in a good amount of that profit. You cannot let it pull back. So worst case, when you get this close, worst case, you've got to have your stop around the first target. Okay, in a lot of cases, when I get this close to a full target, I'll ramp my stop up. I'll maybe give it about $1 or so to pull back, but I'm not going to give up all that hard work. We got so close to a second target. I'm not going to let it pull back and take a break-even trade. So it ended up being a partial winner. Just when I say partial winner, there was a really good size winner here on the call spread, but we didn't quite hit it. We came a few pennies from that full target. And now we've got a new long setting up next week. It hasn't triggered in. The entry point's at 116.79. I really want to be cautious on the upside. If we get new long trades to trigger in next week, I will be trading extremely small position size. Okay, and I'll be trading a lot of call spreads again. Just going to be protective. We've got a lot of profit booked here the last couple of weeks. So, we want to protect that profit as much as possible. TLT. So the bonds had a pretty active week on the downside. No surprise. I mean, with equities plowing their way to the upside, the bonds typically move inverse of equities, right? And of course, we had the employment report out. With the Fed watching that report, like we mentioned earlier, the bonds are going to react to that as well. So we had this trade trigger in early last week on the downside. It's still going. We still haven't closed it out yet. The full target's down at 118.39. We have a stop at break even. We're getting close to the point here at these levels that we need to lock in profit. Just like we talked about on Netflix, we've got to be cautious here. So first thing Monday morning, if we don't get one more push to the downside, a second target, I'm going to be locking in profit. So far so good. I mean, if you've got long puts here, long put spread, doesn't matter to me. Both of them are in really nice profits at this point heading into next week. And like we've talked about in previous videos, that's a great position to be in. Anytime you can lock in profit first thing on a Monday morning, it gets your week off to a great start. It takes a lot of pressure off of the week when you can book those profits and ring the register right off the bat. So some really great price action. What you're going to notice here with the videos, for those of you that have watched some of the earlier videos, you know that I'm looking at the same symbols all the time. I mean, when I zoom out, do you guys see me doing trade recaps of new symbols all the time? I mean, my watch list really does not change all that often. I may make 2 or 3 changes a month, but I'm trading the same products over and over, and that's by design. I want to get familiar with these products. I want to get a comfort level with these products, and that works really, really well. So for those of you that are new, you're going to notice that we look at the same symbols. We're not going to pull up random names that you've never heard of before. We're trying to trade the most active products because we want liquidity. Trading options, that's super, super important. So we're trying to trade the most liquid products out there and names that consistently move back and forth. Okay, so those are some of the trades that I took personally here last week. So really profitable week, a lot of profits locked in. It's the last month or so by far has been my best stretch of the year. I love it. We're ending the year on a really high note, and I don't see this changing. I think the rest of November and into December, I think they're going to be very, very active. So I still think it's a great time to jump in and get involved if you haven't done so already. So heading into next week, very overbought pretty much across the board. New all-time highs on some of the high flyers like Amazon. So we're due for some selling pressure. Let's see if we can get that to kick in over the next couple of weeks. All right, as always, if you have any questions, feel free to reach out. My email is mike@netpicks.com. I will be back middle of next week. We'll take a look and see if we can finally get some selling pressure. So I'll be back on Wednesday with the midweek recap. So enjoy the rest of your weekend, everybody, and I will talk to you next week.